To talk about the markets and metals, folks, we're going to jump over to our man Tim Ord. You can reach Tim at his website every trading day, ord-oracle.com. We talk to Tim every Tuesday and Thursday at 3:30 p.m. Eastern Time. Put that one on your calendar. And if you got a little time during the holiday season, you want to check out some of Tim's great webinars, right at TFNN.com. You head to the Services tab, folks. The Secret Science of Market Tops, how to identify market tops, and the 6 secret ratios every trader should know. And you can check out some of those ratios right there. You buy that webinar, folks. It's on your members page forever. You watch it as many times as you like. Tim Ord. We got the VIX at 1385. Good afternoon, Tim.
Good afternoon. That was it's way low, so that's seen any signs of a top. We've been talking. Actually, this is chart 1. We've been talking about this SPX VIX ratio for I don't know last couple of weeks, whatever, or 2 weeks. But anyhow, we're hitting new highs here on the VIX. Or on the SPX VIX ratio above highs back here. Only problem with what's going on right now. Anyhow, let's get back what this is. This window right here is the SPX VIX ratio, and it kind of leads the SPX. So if this ratio is not hitting new higher highs like here, where the S&P was hitting higher highs, that's usually a bearish sign you get a pullback, which happened here. But basically since, this is October. The ratio's pretty much making higher highs, made a higher high there, minor pullback. Now we're still making higher highs, so as long as this ratio keeps making higher highs, the SPX at some point is going to make higher highs, and we're actually hitting new highs right now as we're talking. So,
let me ask you real quick, because you always break this down. I think you often, of course, when we get these moves in the VIX. But when you look at, so we're at the lowest level that the VIX has been at all year, right? Which is remarkable when you look at it. And the markets had a heck of a year for a VIX where we haven't seen these levels. Does that mean, I'm sitting here saying, my goodness, right? The market has proceeded higher, and now we actually have less volatility. Just pretty remarkable that we're at actually lows when, man, this market's been a great market, and even with positive action. And so what does that say? It just points to higher prices until that turns around, right, as the charts say?
Right, that's pretty much what starts say. Here's kind of a drawback. You see this area right here?
Yes.
Anyhow, the VIX is above the upper Bollinger Band, and it can stay there for a little bit, because that's probably about a week or so. And it's kind of hard to see it, but we're right above the upper Bollinger Band.
Yeah.
So you might see a consolidation, but the pullback. Market does pull back a little bit. I think most of the volatility to the downsides is kind of done, because we kind of had a slap in the face in October. We had another fat slap in the face in November, and we're up in here. And this is usually not a high volatility time going into actually December, January. Most of that's probably over, but most likely, I think even though we're hitting new highs on the SPYs, the volume's not really matching. I'm not bearish here. I think the market's pretty much just going to hold its level, if not move higher. But it may stall in this vicinity here. That's what I'm kind of looking at. But the monthlies, I wish I had that on. But the monthlies, SPX VIX ratio is also hitting a higher high, new high. That's on a monthly time frame. And the monthlies rule the weeklies, the weekly rule the dailies. But I think we're probably, maybe not this week, because we got tomorrow, I think it's a half a day. Then Christmas is Thursday. Friday, it's going to be a nothing day. So you might see a pullback possibly starting, if not late this week, maybe next week. But nothing real significant to the up or to the downside, because the VIX is pretty much, if you got VIX hitting new lows for the year, that's not a bearish sign at all. But you can see a minor pullback here. But I'm not trading it. I'm probably going to stay long unless, something weird starts to happen. But if the market does pull back and we go up again, and we don't hit a new high on the SPX VIX ratio, it's time to look out for that. So that would be but that hasn't occurred yet. So that's not even on the drawing board as yet. But it's I don't know. It's bullish. You don't want to short here, especially with the VIX hitting a new low. But Yeah, you're right. It's bullish.
Because let me ask you this: is it a good way to think about it for those listeners out here? Because I've lived with the VIX for a while, but it's pretty cool mentality-wise, where you say to yourself, "Okay, nobody's paying up for premium or insurance whatsoever, because nobody's even thinking about selling in this market." I mean, that's how I think about that mentality. Does that jive with the way you think about it at all on that VIX?
Well, the VIX is actually it actually measures the premiums on puts and calls, and so it's a pub. It's not a commercial thing where the commercials are in this. This is a public thing. These are puts. And, I guess commercials can be in the put and call business, but basically the public's in the put call business. So the premiums are actually very, very low. When the premiums are high, that's usually when you get high volatility. When premiums are high, in other words, premiums started going high here because this ratio is going down. That means the premiums on puts and calls was going up. So that would suggest that since the premiums are going up, they're hedging. They're hedging on. In other words, they're selling calls against their long positions per se.
Okay.
Am I making sense?
Probably not. For sure. No, I kind of, but always walking through it because I know you understand it so well, and I understand it too. But there's so many listeners, I think, that they see that number, but just like you're talking about, so they're paying less, folks, for those premiums, and so they don't expect the movement to warrant the premium, right? So there's
right. So right now they're put it this way: if you got a VIX hitting new lows, you can't be bearish. So
can I ask you that on an absolute level? Because I find myself saying, okay, we're at 1387. How low can this thing really go? Now, it can go a lot lower. I mean, you just back it up to last year, and I have a 10 on here. It was at 11 or 12 for a while. But do you ever, because I love the ratios, and check out the webinar, folks, on the front page, TFNN under the services tab. He talks about 6 of them, the ratios. But do you ever look at the absolute? Because I look at it and I say, all right, man, we're at 1386. How low are we going to go here? Because really, you start approaching a 12 handle, and man, we're really talking about a low number. Do you look at that absolute number or just the ratios?
No, I kind of look at the ratios because whoops, the music came on already. So
yeah, we're flying in, folks. That's all right. We're going to come back with Tim. We'll talk about some of that. We'll finish this conversation on the ratios. And as I mentioned, folks, one of those webinars talks about these ratios. Check it out on the front page. We're coming back with Tim. Stay tuned. Welcome back, folks. We got the S&Ps up 30 points. We're not really moving right now as we sail into the closing bell right now. Half day tomorrow. We're talking with our man Tim Mord. And don't forget, folks, we're talking about some of these ratios. You can head on over to the front page of TFNN, the 6 secret ratios, as well as his other webinar and his website, ord-oracle.com. And I appreciate the answers, Tim. Just asking a few extra questions because it was pretty remarkable. We talk about the VIX, and we're ending in the year on the lowest level we've seen all year. So pretty remarkable. Yeah. I appreciate it, man. Please go on.
Yeah, so it's the only thing on a short-term basis here is this example right here. When the VIX gets stretched up too much or too low, and we're kind of getting above the upper Bollinger Band right there, that tells me this is kind of a low volatility period right here, and that may be what's setting, and we may get slap in the face, but it's not a top of any consequence. So that'd be the only thing it's still bullish. You might see a minor pullback just because we're stretched to the pretty high level on a short-term basis to the VIX, and you might see a pullback, maybe next week or something. But I don't see any dire situation to get out of the market. It's a normal consolidation or an uptrend until the market starts making higher highs and VIX or the SPX VIX ratio makes lower highs are the times to worry, and we're not in one of those times yet. So to me, it looks bullish, though we may see a minor pullback here sometime, I don't know, week or so. So that's the only thing I see.
I appreciate the breakdown. You got great ratios. That one's one of my favorite, though, because it's so simple, too, and it just makes so much sense, and it seems to work so well. So thanks for breaking it down, definitely.
All right. Let's kind of get momentum charts here. There's a lot of momentum, and gold issues are rallying to new highs and stuff, and I actually getting people kind of worried about how far this rally can go to GDX. That's really a good sign when they don't worry, or times to worry. So,
Yeah.
but momentum right now is kind of a king thing. There's a lot of things I can point out on the gold market. It's gone up too fast, too quick, and that may be true, but momentum rules. And until the momentum turns down, then then it turns down, I guess. But I brought a couple of momentum charts on the. I could repeat on this chart. Your listeners are probably tired of hearing about this, but I think there's we're over 70 on this RSI on this XAU to NDX ratio. So next year, gold issues I bet outperform the Nasdaq issues. As long as this ratio or this RSI stays above 50, I think gold issues is the way to be. But at some point we're going to consolidate. Where's that consolidation going to start? Well, here's one indicator. This is the 50-day average of the up-down volume for GDX. So it's like 2.5 months of data. So it's kind of a slow-moving average. It measures the up-down and up volume and down volume for the components that are in GDX, because GDX is an ETF, exchange traded fund. And so I marked out in blue. This chart goes back to mid-2017. So it's quite a few years. What's that, about 8 years or so? Works really well. So as long as this indicator on the bottom, which is the up-down volume, stays above zero, and the higher above zero, the more stronger that rally is. And we stayed above, 20 for, looks like September, October, November, and we fell back down a little bit, but we're coming in around, close to 13 right now. So as long as this indicator stays above zero, the uptrend should continue. It doesn't try to catch the exact top because it's kind of a lagging indicator, but not too bad. It gets close to the tops. This is probably a little bit late, maybe a week after the top, but it nails the tops pretty well. And so so GDX is still pushing higher here, and this indicator is holding well above zero, plus 12. So how long can that last? I don't know. We got the signal to go long back in early 2025. So I don't know. It looks like about January of 2025. This indicator was made on a buy signal. Kind of had some ups and downs and some consolidations along the way, but nothing major. Even this decline we had from 85 to 70 didn't really affect this indicator a whole lot. So it doesn't try to pick out. It only picks out large declines. I'll put it that way. And
what's crazy is that pullback was literally like almost just like 1 week, right, among a year, where it's just. I was pulling up the GDX when you're talking about, because that acceleration is something else when you're looking at that on the most recent one we had, and that GDX it went from about 50 up to almost 85. So like 70%. It was up over three months, something like that, and then you get that little pullback, and then we go straight back up to 90. Yeah, remarkable strength.
Yeah, it is remarkable. Matter of fact, look how high this indicator got. I mean, it got up to almost 35. Last time it come in, we were close. That was about, I don't know, looks like about 27. So it was a lot of strength in the gold issues, and so everything that's gold related is probably going to start moving up, and it's still positive right now. So this indicator can get you out close to the top. But if we get below zero, it's really kind of worrisome. And so far, that hasn't happened yet. So are we long GDX? Yeah, I thought we might find resistance to 85, which is the previous highs we had. I thought that's where we're going to go, and we're going to go flip sideways. And so far, we're not. So
not yet, right? Not even close.
Yeah, not
right?
yet.
Every day I wake up, I said again. I see the headlines, all-time high. I said that yesterday's headline? No, that's a new one. It's happening again. I know.
Right. So it's kind of took me a while to get. To me, the rules were plan and submit when I got into this business or not, but anyhow, this is indicator is kind of a bigger view. It's a longer term view. So this is a shorter term view. This measures all the wiggles out of the market. So we had what it is a cumulative advanced decline for GDX, and this This is up-down volume for GDX, cumulative. So it's a little bit different look at how the data is calculated, I guess you might say. And it works really well as long as this, and I got Bollinger Bands on all the top windows of GDX so you can see what's going on. But as long as this indicator stays above the mid-Bollinger Band, which is the green area here, and when it's below the mid-Bollinger Band, those indicators are below the mid-Bollinger Band, which is here and here, you got short-term uptrends, short-term downtrends, and this indicator didn't give a sell signal on that pullback from 85 to 70, wherever it was. It pretty much stayed strong, and right now we're still making higher highs, higher lows. Still higher highs, higher lows. So until it goes below the mid-Bollinger Band, the last time we got a signal, it looked like the first part of November, and it stayed a sell signal until looks like about January, mid-January or something. So you're out of market for about 2 months. I can't quite tell how much the market went down, but maybe 10 points, 50, I don't know, but kind of hard to tell. But it's this indicator on a short-term basis is still bullish. So I'm holding along GDX.
I like those numbers, man. Those Bollinger Bands. I mean, hey, can't argue with the numbers. Look at that chart. Tim, appreciate the education, the time as always, man. Appreciate all the help. I hope you have a great Christmas with your family, and we look forward to talking to you next week, man.
All right. Merry Christmas.
And Merry Christmas. Thanks again, Tim. Check it out, folks. Ord-oracle.com, and check out those webinars under the Services tab. We're coming right back, folks.